Good morning. It is Friday, August 11th, 2023. This is Rob Sin at CEO Technician on Twitter, at Goldfinger on co.ca. And this is my latest YouTube video. I want to discuss S&P futures trading, E-mini S&P futures trading, and just sort of talk a little bit about the setup here and gold miners. So we start with a daily chart of the E-mini S&P futures. It's always good to get a bigger picture look first and then zoom in on the shorter term price action. So on the daily chart, well, again, I try to keep my charts as clean as possible. I've just drawn this little rounding top, this little bit of an ellipse there showing the action over the last month. Obviously, there's big resistance up above 4,600 in the E-mini S&Ps, and we've been in a correction for the last few weeks, coming down from, what was it, 4634.50 on the 27th of July, and we got as low as 44.59 this morning. So about 175 point correction in the last few weeks in the S&P 500. And when we're walking in this morning and the futures are trading around 44.65, take a look at this daily chart. Well, we're coming right into the 50-day moving average, and then we look to the left on the chart, and clearly there's some price memory in this 44.65, 44.75 area. This is an area of potential support. So when you have a gap lower open into an area of potential support, you want to be looking at potential buy setups. And if we go in, zoom in on a 3-minute chart, you can see that the first 30 minutes, the action started to build. We started to get a little bit of an uptrend forming off the open. And then right at 10 a.m., we got this big bar higher that opened at 44.6750 and closed at 44.7875. So this was a long setup for me. I got long right here on this candlestick at about 957, 44.67 entry, and I took profits into this bar, riding it all the way up. Then we see this consolidation action and another leg higher up to 44.8975. I took a short entry up here. This is all in the trading lab, all documented. What's interesting is this friction up here around 44.90. It was very choppy, very tricky action is just the way I would explain it. Tricky, not clean action. And it ended up forming this double top here on the 3-minute at 44.93. It's no accident where this double top formed. If we look back to yesterday's action, you can see there was also a lot of friction around this, the 44.90s essentially. And it proved to be an area of, resistance and overhead supply. So yesterday it was about 44.95. Today, a little lower, 44.93. So still, this is a market that is in a downtrend, making lower highs and lower lows. Now, we want to see how this closes out the week, okay? Obviously, if we get back above 44.93, that would be very, very good for bulls. But it will be interesting to see if we do probe lower and test down around 44.60 or maybe back into the 44.50s before the close. It'll be very important to see how bulls, respond there. And really, to have a good weekly close, we want to close back above that 44.80 area to really show that bulls are supporting this 50-day moving average again on the daily chart. But I must remind that it's August, right? Like we are now officially in the dog days of August. And I would expect that action range, the size of the daily ranges and the volume is going to start to trickle lower every day from now till the end of the month. Okay, sort of culminating into Labor Day, and then the market will pick up again post Labor Day. There's a very strong seasonal tendency. Volume trails off as August wears on, and trading ranges get thinner and thinner. The options market is also, indicating that, both in terms of the S&P 500 and even in terms of gold. Implied volatility is really low. I mean, this is the GVZ, this is the gold volatility index, lowest since early 2020. So, and we know what happened in February and March 2020, one of the greatest volatility spikes in history, quite frankly. Not saying that's going to happen this time, but I just want to point out that we are literally at the same implied volatility levels as we were back in January 2020 for gold. And the VIX is also very low. I'm not going to even pull that chart up, but the market is not really pricing in much volatility for the rest of the month of August. We'll have to see if that proves to be the right call. I do want to take a look at the GDX chart. We tried to get up to 29.50 earlier in the session, pulled back a bit now, 29.26. So the GDX is consolidating just above this big support area around 28.75 to $29 a share. Unconvincing action so far. This does not look bullish right now, but that could change, in one day. If we get a 3 or 4% up day back above $30 a share, it will look like the support level held yet again. And then bulls will have the ball. Bulls will have the momentum. Right now, bears have a chance to crack this 28.75 support level. So far, it was tested on Tuesday and it held. But this is a big moment here for the gold miners. I was pointing out on Twitter earlier in the week that seasonality, if you go back 20, 25 years for the gold miners, the gold bugs index, seasonality is bullish for the next month. So straight through Labor Day, even a week or two after Labor Day, there are tailwinds here for the gold mining sector. Let's see if the bulls can actually pick up the ball here and run with it. So far, looks like they're pretty ambivalent. They're not showing much conviction here to buy the gold miners. There's so many gold mining charts that are sitting right at big support levels. Agnico Eagle, $48 is big support. Newmont, $40 is big support. We're at $39.87. So I'm not going to go through all the charts, but this is a big moment for the gold miners. This could be an incredible buying opportunity right before a big August rally in the sector. But so far, we are not seeing it. That's all for me today. Wish you a great weekend, and I'll see you next time.